In today's section, we have some objectives that we want to achieve. The first objective is to understand the concept of Sharia governance. This will allow us to gain a clear and simplified understanding of how Sharia principles guide investment decisions and ensure ethical compliance. The second one is to learn how Sharia compliant investments work. So we'll be exploring the structure of halal investments, products, and how they differ from conventional instruments. Another objective we'll be looking at is to unlock powerful insights on how Sharia governance drives confidence in uncertain markets. The fourth one is discover proven strategies to protect investments and manage volatility effectively. The fifth one, learn from experts on building trust through transparency and ethical compliance. And achieving this objective will enable us position ourselves ahead with tools to navigate and thrive in turbulent market conditions. Today, we'll also be leaving the floor open for questions and engagement with the experts we have in the house so that we can get clarity on common misconceptions and practical concern around Sharia compliance investments. So these are what we want to achieve today. And like we said, we have scholars in the house that are masters of this particular subject matter. They are here to answer all our questions and to provide clarity to any misconception we are having. I will be introducing the scholars, our speakers for today. If we had to go through the complete biography of our scholars today, that will be the only thing we'll be doing, and that will even be the major presentation for today. But we'll be summarizing the biography of our scholars, and they are widely known. So you can also check for them on the internet, and you surely get more information about our presenters for today. Our first presenter is Dr. Basheer. Can you put the camera on Dr. Basheer so that our attendees can see Dr. Basheer? So, Dr. Basheer is a respected leader in non-interest Islamic finance in Nigeria with over 24 years of experience across banking, real estate, fund management, and academia. He is the president of the Non-Interest Financial Institutions Association of Nigeria and CEO of Trust Author, a SEC-regulated fund and portfolio management firm. Dr. Basheer Oshodi is recognized for mobilizing over 500 million USD in equity and debt financing through his leadership roles, supporting sustainable development in Nigeria and across Africa through ethical Sharia compliant financial solutions. He holds advanced qualifications from prestigious institutions including Oxford, Wharton, Columbia University of Lagos, London Metropolitan University, University of Buckingham, and Da Vinci Institute, South Africa, alongside a PhD in Integral Economic Development and Islamic Finance. He is an author, researcher, and advocate for healthcare finance, known for bridging academic insights with practical industry impact. This is just a brief and summary of who Dr. Basheer Oshodi is. So, without wasting much of our time, we'll be going straight to the presentation so that we can benefit from our scholars in the house. And we'll be starting with the first speaker, which is Dr. Basheer Oshodi. So we're doing the first presentation. Dr. Basheer, you are welcome once again. Thank you very much. You have the floor, sir.
Okay, thank you very much. Good morning, everyone. It's nice to be here. Thanks for inviting me. I don't know if you can see my screen clearly. Can you see my screen?
Yes, we can see your
Okay,
screen.
okay, fantastic. Okay,
Okay, you can
so
put it in presentation mode to make it a bit older.
okay, to be bigger. Okay, so let me just okay, 1 second.
Okay, okay, I think it's okay this one.
Okay, okay, so I'm just going to have just 20 minutes. So I'll run through the slides, if you know what I mean. Looking at Shariah governance and of course overall market confidence. Again, volatility is a normal thing, you know, in the new world. I mean, it's been a normal thing, but it has become the normal even now, you know, even before COVID. So every now and then there are spikes in the market. You know, there's volatility all the time. One government policy, you know, either from the US or from Nigeria, spikes the markets, right? Causes some kind of tides, you know. So how do we then ensure that governance, particularly Sharia governance, you know, is able to absorb those forces that comes all the time, that will always come. There's what called predictable surprises. Predictable surprises. Surprises that will come, right? Regardless of anything. You know, the surprise, the confirmation that you know, rates will go up, right? Or inflation will happen, or take place, or stay for a very long time, or businesses will go down, right? So those things that we're sure that will happen, we call them predictable surprises. But you see, in the same vein, we can also then talk about predictable success, right? So in the middle of these volatilities, right, we then also ensure that we can sustain success, if you know what I mean. I'll try to use practical examples as much as I can. We're going to look at very quickly state of Islamic finance globally, locally, frameworks, Sharia frameworks, the volatility tests, you know, confidence architecture, and of course, particularly technology. I mean, in the next 20 years, the world, the richest set of people and companies in the world will be those doing AI in the next 20 years from now. 20 years ago, it was said that those in technology will control global markets. So right now, from now onward, it's going to be those in AI, right? How can our Sharia governance, you know, sustain that force? You know, so I'm going to be looking at certain areas, you know, crypto and briefly, of course, um, and also tokenization, all of these things. Very briefly, because again, in 20 minutes, I'm just going to, you know, touch everything briefly. And of course, look at the roadmap, and then we can take some questions after that. Now, we've got our scholar there. I'm not going to bother to try to describe what Sharia governance is, but people always ask, what's the difference between non-interest finance and conventional finance? And so people go into loads of things, defining what it is. Non-interest finance is this, Islamic finance is that, conventional finance is this. But again, the broad difference between conventional finance and non-interest finance is Sharia. Sharia basically means Islamic law or rules, a way of life that guides finance. You see, when we went back history, it went back to, you know, if you like, financial history, economic history. We found out that what we call Sharia governance today. Again, I always like to talk about the works, the master works of Aristotle. You know, Aristotle lived almost 400 years before Christ, thereabouts, and his works could have been Sharia compliant, you know, way back. So we found similarities, you know, in the works of Aristotle, what you have in the Bible and the Quran. Amazing, right? Is that amazing? And of course, what you have as conventional finance today could have been Islamic finance, right? Could have been because it was based on moral, ethical standard. Again, variations started to emerge at some point, right? Again, of course, in the Bible, you can see provision of interest, and so what you have right now is provision of interest, the condition of that storyline. Again, I went back to the time of Aristotle, down into Christian era, and now what we have as Islamic finance could have been the same thing. In fact, we found that the great Christian scholars like Adam Smith and so many of them were influenced by Karl Marx. They were influenced by either their Jewish or Christian background. That was what led to economy. I mean, Alfred Marshall was supposed to be the was supposed to hold the major position in the Church of England, Alfred Marshall, and was a great economist. He introduced mathematics into economics. His concern was morality, good life for people, good life, right? And so we found the same thing. So what happened along the way? Why the definition of interest metamorphose or change? What happened? And we're not going to have time to go into those storylines, right? But again, the core difference between conventional finance and non-interest finance is Sharia, right? And just a thin line. And in fact, just a process. The process is my phone Sharia compliant. Phone, it's a phone. Is Sharia compliant? Is my bottle of water is Sharia compliant? Of course, it's Sharia compliant. If you sell cement, is Sharia compliant? It's Sharia compliant. If you build houses, right? Are they compliant? They're compliant. So what is not compliant? It is the process. It is the process that makes the buying and selling of this phone to be either conventional or Sharia compliant, right? And water. I want to supply water, right, to some outfit, a company, or for a party. The process of getting that water there, is it compliant? And so there's a thin line between what is compliant and what is not compliant. However, there should be custodians of this thin line. Custodians. Who should be the custodian of this thin line? Right? I go to the market, I want to buy nice turkey, looking very good, right? Turkey. You just want to buy turkey, I don't know how much turkey is now, just a piece, 5,000 naira, right? One turkey is not compliant. It's not allowed. While the other turkey, the same price, 5,000 naira is compliant. What makes one, I mean, they taste alike. They probably roasted them together, right? In the case of one, they just killed it or they injected it or something and it died. In the case of the other one, they called the name of God, God is the greater, and they killed it. That is what makes one compliant and one non-compliant. So if you're buying a phone, what makes a transaction? You're supplying 20 containers of phone from China. And one transaction is compliant, the other one is not compliant. It's just a process. One is based on money on money. You earn or receive money on money as a condition for that money. Either it's money or it's instrument in case of LC or whatever you have used to buy those phones, right? One of it is based on interest, that is money on money itself. While the other one is based on trading. You can see there's a difference. In the one hand, in the case of the first one, you're giving out money and you're getting more money at the financial institution because I've given out money. So you make a spread on it. Spread is, let's say, 30%. However, in the second case, you're using a sale contract, a Muraba contract. You're buying, right, for the clients from China. You're using LC to buy it, as the case may be. You buy, right, and then you then sell it. You buy for, let's assume the container is, let's just keep it simple, $1 million. You buy for $1 million using the LC, and then you sell to the obligor, for $1.3 million. That's it. One is compliant, one is not compliant, just the process. So that process needs custodians, people that will ensure that, you have complied with the process, which must be documented. How much more? While the goods is coming, it gets to the Strait of Hormuz, and then, it's hijacked or it's blown up. How do you then solve that risk, where it happens? Or perhaps it actually got to Nigeria between the ports, Apapa port, and the warehouse in maybe along Oshodi Expressway. It doesn't get there. How do you manage our risk, Sharia wise? Or in fact, there's no risk at all. You have issued a commercial paper, right, for less than a year, right? It's going on, everything is looking fine. And in the middle of it, there's a shock. Must you monitor the process? Or do you just issue a fatwa, a ruling, or Sharia certificate, and everybody goes to sleep? Oh, let's go and sleep. It's Sharia compliant already. Or do you monitor periodically, right? Have you done a nice real estate project out there in Victoria Island? Maybe it's to cook, a 3 years to cook, a 3 year mudarabas to cook, for example. And the Sharia advisors issue a certificate and says it's fantastic, it's compliant. Everybody goes to bed. Now, within that transaction, monitoring is essential. Or do you write your audited financials? Your accountant the audited financials. You say, well, but you have a Sharia fund, and there's no report. There's no Sharia report. Of course, the accountant will report, all the other parties will report in audited financials, even the law firm that looked at it will send their own comment. Have you included a Sharia report, in that audited financial? If it's not there, then that process is not complete. So there's a custodian where there's volatility and where there's no volatility. And just like I mentioned to you, there will be expected surprises, all called predictable surprises that will always, always, always come. The surprise that this guy will supply the first set of phones, but the second set will not come. Or the surprise that, and it happened in one of the banks where I worked. So the transaction, Sharia compliant, we had done everything, we had disbursed the money, and then the Moraba transaction, there was a jump in process. The first contract should be a promise to purchase, and then, we appoint the party as the agents, and they do a Moraba contract, and they do a sale contract. The sale contract was signed before the promise to purchase contract. Process. That little process made it non-Sharia compliant. And so the Sharia board said, the income cannot be earned. You cannot earn the income from that transaction, of a big transaction. It became non-permissible income, right? So again, how do you give the market, whether there is volatility or not, how do you give the market confidence on the back of Sharia governance? And that's the question we're going to talk about. Again, I've got just 20 minutes, so I'm just going to brush things up very quickly, right? I'm not going to talk about the market. The market is good. So our federal government to cook, it looks very nice. Again, I must confess now, we have the Arthur Islamic Finance Market Index now, which we release every month to show you not just the performance of the equities, and of course, you then also look at the federal governments to cook, corporates to cook, subnationals to cook, and the performance of the non-interest market. So you can see that performance right now in the index, right? Now, we expect spikes from time to time, and we expect monitoring. So the start of the market has been fantastic. Global market is lovely, $4.5 trillion, all of those nice storyline. Whether we have replicated that in Nigeria or not is another issue. Our market in Nigeria is still struggling below 3 trillion naira. Plus cook and the banks and the asset management put together. We're still doing less than 2% of the global the Nigerian asset size, right? So we still have a long way to go there, right? Now again, who are the custodians of this process? It's process. Sharia governance is process. If my phone is compliant, and cement business is compliant, and water business is compliant, what is not compliant? What is not compliant? Yes, when you take out conventional financial institution, ammunition, we produce ammunition in Nigeria. We take out tobacco, alcohol. Every other thing is compliant. But it's the process. If the process for buying cement is not compliant, then it's not compliant, right? Again, if you have a bit of time, we'll go into how we determine compliant equities. If I build a house or I do a REIT, a real estate investment trust, right, and I get Sharia certificate today, and it's just a building of maybe 10 floors. And today, two of the floors, I've rented one to a conventional financial institution that does interest. I've rented one out to a beauty company. 20% non-compliant, Sharia allows it, right? Most Sharia scholars allow it, right? However, the REIT has been approved by the Sharia advisory team, either external or internal, both. And then it's on the stock market already, right? It's trading. And then there's an empty floor. And that empty floor, we couldn't get a tech company to take it. We then decided to rent that empty floor to a company that does tobacco. That's 30%. At what point would the Sharia team, either internal or external, look at it and say, "Hey guys, hold on, there's a problem," you know, because we have done Sharia audits in the middle of the year, we've then realized that what was permissible before is no longer permissible. Or I invest in the supermarket, I won't mention any brand, and I'm supposed to have 5% of the income from that supermarket is non-compliant. They sell tobacco, they sell alcohol, which is fine. They sell some nice movies I don't want to talk about, which is fine. However, the income is just 5%. And suddenly, without anybody checking, our in the stock market, everybody's investing in it, everybody likes it. And then behold, new supply of NSE, and the income from the sale of NSE and other alcoholic drink increases to 7%. It becomes non-compliant. But who is going to ensure the point where it becomes non-compliant? But let me give another example. You invest in a cement company, in the stock market, cement for building houses, cement. And then that cement company has taken a loan, a interest-bearing loan from a conventional bank, right? Their total assets, for example, is 100 billion naira. Their total asset, 100 billion naira. They have taken a loan of 33 billion naira from a conventional financial institution, right? Which is fine. Sharia allows under office standard, right? They allow it. So no problem. We can accommodate this. And then they needed to expand. They needed to buy a few products. So they go to particular supply. They then go to another conventional bank and take additional facility of 3 billion naira. But let me just keep it simple. Additional facility of 7 billion naira. So it means that the total facility, interest-bearing facility that they have taken from conventional banks is now 40% of their total of their market cap or total assets. It's no longer compliant. I repeat. When it was approved, they've taken 33 billion naira. A few months later, they've gone to take another 7 billion naira. So their conventional debt as a percentage of their market cap or their total asset is now 40%, no longer compliant. Who ensures that? Right? Volatility can be based on market needs. I'm doing business of 33 billion. I need another debt of another 7 billion. I go to the market quickly. I raise the money, or I'll go to a bank to get facility. That itself in Sharia is volatile. Is a volatile environment. So a volatile environment is not when there's war, everybody shooting themselves. When there's COVID. I'll talk about COVID briefly if I have the time. But a volatile environment then becomes a scenario where you add more. Let me give a third example. That cement company invested in bonds and T-bills. Out of their market cap of 100 billion naira, they have invested 33 billion in conventional bonds and T-bills, which is fine. Sharia allows, is flexible enough to allow that. However, new issuance of T-bills, right? It's that, this interest is fantastic. We're going to collect the money up front. They decide to put in another 7 billion, not even 7 billion, 2 billion. And let's buy this vehicle, under 2 billion, they get the profit or rather the interest up front. They want to use it for something else, which sounds nice. Now, it has shot up from 33% to 35%, no longer compliant. So the volatility we see in Sharia can be a volatility as a result of expansion or needs. financial. So who checks it? Advisory committee of experts, they're not even aware. Internal Sharia review team, yes, internal Sharia review team. So within the organization, there must be an internal Sharia review team as stated in CBN guidelines, right? Again, and we all try to make sure we have it in-house, right? Yes, there's fatwa. Fatwa means ruling. Yes, there's ruling that is compliant. Yes, purification of account, everything. However, because of needs, things changed, right? How do you address that and ensure that there's consistent Sharia governance, right? So I give a typical example. Again, the issue is to cook right now in the market. It's Sharia compliant. Central bank approves it. You want PFA to put money, everybody puts in money, right? But there's no monitoring, no monitoring, right? And something changes, you know. Maybe while doing the construction, assuming it's real estate, two piles fail. And as bankers, if you're doing real estate, I go to a lovely site and they're building, and the piles fail. The foundation, if it fails, how are you going to know? How are you going to know? Your project manager has not told you the piles have failed. You're going to be excited. You're going to take pictures and so this project is moving on well. But two piles have failed. How do you know? It then means that the money you have mobilized is not even enough because you need to replace those parts or destroy the entire structure. This is what we have experienced before. Except the project manager, under the supervision of the Sharia team, also goes there to look at it and say, do you know what, guys? Two parts have failed. Or price has increased. And so the amount we have said we're going to use for this structure is happening in one of the sukuk we did in Nigeria. They're supposed to build X number of structures. I'm not going to mention the sukuk, but you can guess right. And then, I think they're going to do about 22 structures. At the end of the day, in the middle of the sukuk, of the flag, hey guys, hold on, there's a problem here. We can't do more than 10, And everybody has to go back to the drawing board to say there's a problem, price overrun, price spike. We can't do it. So everybody has to go back to the drawing board, all the investors have to come together. That information must reach the investors, right? So that kind of spikes or the kind of volatility we're talking about, right? It could be price volatility, it could be political environment, it could be international problems, anything can lead to those volatilities. Or just, shareholders fighting, another category which a lot of people don't know, right? That can lead to volatility in any environment, right? It can lead to Sharia non-compliance risk. Now, so you have loads of regulation. I'm not going to talk about that. More recently, I must confess, FRC.
5 more minutes, sir.
I have 1 minute.
Five. We can, yeah, like 3 more minutes.
Okay, that's still a joke. Okay, so FRC more recently set up a team of the best minds in Nigeria. Non-interest financial institutions, asset management companies, of course, all the top audit firms, to look at how we can use AOFI standard, AOFI, Accounting and Auditing Organization for Islamic Financial Institutions. How we can adopt AOFI standard for all our transactions. If you have a stain of non-interest finance, the idea then is that you must use AOFI standard. Yes, there's a regular standard that we use, the international standard. But the question then is, how do we then make everything Sharia compliant rather than use the conventional standard? That's how use our office standard. And in that office standard, there are three governors, there are three subcommittees working on it right now. There's the accounting committee, there's the auditing committee, and the governance committee. We're then trying to inject IFSB, Islamic Financial Services Board, into that document. So there's a perfect gallery which is going to come out in a few months' time. Now, yes, central bank, Security and State Commission, everybody has done what. Nigeria has the most regulation in non-interest finance in the world. Nigeria is one of the most regulated, countries when it comes to non-interest finance. So when it comes to what I call infrastructural or regulatory infrastructure, we've done very well there, right? So we think the market should grow. 2% is low. Now, so when you have COVID, so in the middle of COVID, something happened. You know what happened? You have done a muraba, you have bought a phone, right, for 3 million naira, right? You are paying a markup of 20%. You're supposed to pay every month. Now you're not going to work. Your company is not making business. You're supposed to still keep paying. You know, so central bank, sent something, advise all banks to freeze interest rates. So in the case of non-interest banks, what are we supposed to do? Freeze markup rate. Markup is fixed. Even if the guy does not pay for 1 year, it's still fixed, right? Now, in the middle of COVID, Islamic banks had to agree, or Islamic financial institutions, that let's also freeze markup. That markup that is fixed, we'll leave it there, right? So Muraba transaction or sale transaction became the most volatile contract to be used in the middle of extreme national volatile environment. Muraba. Next set of contracts became the Ijara contract, where it is fixed rental Ijara, fixed rental. The most fluid and the most flexible of the contracts were the Mudarabas and your Wakala and your Musharaka, right? The partnership or the equity-based contract and the agency contract. They became fluid because as prices increase, you can increase your price, you can change, you can still make money. It's the reverse when there's no volatility. I hope I'm communicating. We don't have a lot of time. I have a few minutes. I'm going to try and round up. Yeah. So again, let me just go to the last part. Regulatory foundation. Yes, we should have licensed Sharia scholars. We need a lot of them. We need to do capacity building. We're planning to do a lot more now. We used to do that in the past. Capacity build. I wouldn't call it capacity building because you cannot, for scholars, like, what do you mean you're building capacity for us? What we'll call it knowledge sharing among scholars. Knowledge sharing. How do we share knowledge so they can look at real life situations? A central bank sometimes release a compendium of Sharia decisions, right? And that should not really continue. We need to have those materials that can guide new scholars coming. Because again, if I want to do a Wakala transaction, I'm not supposed to take a guarantee in a Wakala, right? Wakala means agency contract, right? I'm doing oil and gas deal, or I'm doing some trade deal, is 5 billion naira, 5 billion naira, either it's a CP or it's a sukuk or whatever it is, or it's direct lending. I'm not supposed to I'm appointing the obligor, my agent, to go and buy these oil and gas. Of course, there's now the conflict from Dangote, which is a good one, right? Am I going to say because it's a wakala, I've appointed the gentleman or the gentle company as my agent, I'm just going to give them 5 billion and go to bed and go and sleep and be snoring on my bed? And then behold, it tells you that, but this is the thing when it was coming from Momos. American fighters seized this. Or we've experienced this before on the IC around Benin Republic. So, but they seized it. Or no, it was Nigerian Navy guys that seized it. Hey, that story. So in a Wakala structure, even though guarantees are not accepted, we can then go to Sharia board and say, Sharia board, we have a problem, please, you need help. Can you allow us take a third party guarantee? Because it's a big chance. I'm not buying samosa for a supermarket. I'm not disbursing 5 million naira or 1 million. I'm disbursing 5 billion naira. Can you allow me to take a guarantee? So in extreme cases, under Sharia governance, when market is volatile, and when we envisage volatility, we go back to Sharia board and appeal, right? Or you have done an istisna transaction. That's a sale transaction, which is for construction. You have mapped your markup, right? Price has gone against you. Price. You have given the facility at maybe 18%. And cost of funds has shot up to 23%. You are carrying negative return on your books. Can you go to Sharia board and say, Mr. Sharia board, I want you to please allow me to reprice, even though repricing is not allowed for sale transaction. Sale transaction is Tisna, Muraba, and Salam. Not allowed. Right? Can you convince your Sharia board to say in the middle of this volatility of price increase as a result of whatever, I want an adjustment? Can you do that? Yes, you can do that. Right? Of course, Sharia board will then advise that all the parties must sit. Your obligor is informed. Your obligor says, no, I don't want to sit with you. I'm not interested. I don't want to sit with you. And then you have to find a way to solve that problem. Now, I'll try and stop here. I can't cover all my slides. Blockchain, cryptocurrency, tokenization. How do we make these processes compliant? A lot of work is going there right now, but I think the best of the kind of work we should be seeing is where we implement these things, right? The faster we do that, the faster we capture the market, right? Again, is there a mal? Is that value in the crypto? Is that value? Is it does it have the backing of government, right? We know that sex position is not interesting, right? But does it have the backing? Is it a tender, a legal tender, right? Can it be used to finance things that are not good? Whatever, however you want to define it, or defined by Sharia scholars, right? For digitization, have you digitized, or does it just mean that you're just doing things on the phone rather than passing papers around? Or can we tokenize our projects? You see, I think the fastest way, not just the entire product and the process. So I think the fastest way non-interest finance can grow today is through technology. So it means that approval process and the expected volatility that should happen, right, when you put up a nice product, needs to be addressed in a digital format, including Sharia process monitoring. Must be addressed digital. So it means product papers must accommodate this reality. Again, I don't have a lot of time. I'm just going to run through this. So lastly, our scholars have a major role. Of course, the standards, again, I talked about before, we're going to be using our office standard in the next few months. So it means we must understand how it works. So as a continuous thing, we need we need proper understanding of all of these Sharia governance beyond just the core international Sharia review team, but everybody, so that you can quickly feel. So when volatility, when you're faced with if you like, the lion of volatility, the lion coming. Let me address it before it gets to me. I think I'll just end there, and I'll probably take questions at the right time. Thank you very much.